Welcome to another episode of the Wilson Weekly, guys, with yours truly, Dr. Andrew Wilson. Welcome, Doc.
Yeah, thanks very much. Good to be here, of course, where this is our last episode, don't panic, for October, and then we move into November, and then we move into December. That's a shock, isn't it? But what it means, of course, is we're really not counting down to the end of the year, but we're sort of working towards the end of the housing market year. And what a year it's been. Next week, we're going to look at the latest house and unit price report for October. And just a little preview, again, prices are growing. We had a bit of a bounce back from the unit market over October, which is interesting, particularly the Melbourne unit market. And we've been sort of speaking about that, but it did pick up over October. But the unit markets can tend to be volatile, so we'll wait and see what happens over November. But today we've got some big news. Today we had the inflation data released, so we're going to have a closer look at that. The inflation data is very important, of course, because it's going to determine the outlook for interest rates. And we've certainly seen a downward trajectory over the past couple of months. So has that continued over September? This is the September data we're looking at. But the interesting thing is we've had the ABS release the quarterly data sets, which it releases each 3 monthly period beginning March, then to June, September, and then December. So that's their sort of their big daddy type of market insight into the economy and inflation. The point to that is that the Reserve Bank has said that it really looks at the quarterly data rather than the monthly data, which was also released today. Now, we, of course, focus on the monthly data because we get it every month, and we don't want to be waiting 3 months to understand what's happening with inflation because, as I said, it's very important in relation to where interest rates are heading. So we will look at, again, focus on the monthly data, but we'll compare that to the quarterly data, which, of course, is sort of backward looking. It's counting not just September, but August and July. But it is the data set which the RBA favours. So we need to sort of see what's happening there. But what it means, in a sense, is that the Reserve Bank is sort of a hostage to those 3 monthly time periods. So we've had the September data released today. Now, the next lot will be the December data, and that'll be released at the end of January, beginning of February. So we've really got to wait till then to get our next sense of where interest rates are going. And then we have to wait till the end of April to get the March quarter data model, the 3 monthly model. So, we're still looking at, sort of well down the track, and we'll discuss that when we look at the actual data. So if you like, we can look at the actual data and see what's happening this week in our housing markets. So if we can get those slides up. So my housing market, of course, is my brand as an independent commentator and data provider. We're all about the current state and future prospects of housing markets, particularly about the current state. And that's why we bring you this week-to-week podcast in conjunction with our great friends at Infinity. So it is about getting all that latest data we can to keep building that picture of what's happening in our housing markets. And if we get the current data, then we're going to be a lot more confident about the outlook. And that's why we do it. So it is the week ending Wednesday, October the 30th. So it is the final October podcast. And we are starting to count down, as I said before, to the end of the year. We've got a holiday coming up in Melbourne this weekend in Victoria because they have the Melbourne Cup coming up next Tuesday. Of course, that will coincide with the next Reserve Bank meeting, and we'll discuss that next week as well. It's a holiday in Melbourne, so we're not going to get a lot of auction activity, and it's also a distraction in most of the other capital city markets as well. That's why we had our Super Saturday of auctions last weekend. We'll look at those results, and that's because agents didn't want to have a conflict. Sellers didn't want to have a conflict with the holiday and the Melbourne Cup. So a lot of those listings are traditionally brought forward in what we call a Super Saturday the weekend prior to the Melbourne Cup. So, or the weekend prior to the Melbourne Cup holiday weekend, which is this weekend. So this week we're going to look at September inflation data, as we've already outlined. And part of that is house building costs, which we'll look at the latest house building costs for August. We will get building approvals out in a couple of days' time, so we'll be able to update that data, and we'll look at that next week or the following week. And as I mentioned, we'll also be looking at the latest, as we always do, weekly auction results. So inflation down again. We shouldn't be surprised, because we've been forecasting this for some time, not just on the trend, but because of the underlying drivers. So it's not just say, let's look at the trend and sort of figure out what's happening. We as we do here, is we look at the underlying factors that are influencing inflation, just like we look at the underlying factors that are influencing house price and house rents, etc. So we can, do a robust analysis of what's occurring, why it's occurring, and what's likely to occur in the future. So inflation down again. Headline inflation. Now, this is the September monthly data, which we have been focusing on. And we will, of course, month by month bring you the update. So we'll look at the monthly data and have a quick overview for the quarterly data, the 3 monthly data that was also released. So annual headline inflation over the month was down sharply again. We predicted this, of course, just 2.1% annual inflation over September. That's the change over the past year. So that compares to September last year. And that's down from the 2.7% rate over August. So that's those numbers, without looking into it further, are very positive in terms of the Reserve Bank target at first glance, but we'll look at that a bit more. Now, underlying inflation, and now this is where we get a little bit technical, underlying inflation is the preferred measure of the Reserve Bank. So underlying inflation takes out the volatile elements that are affected by seasonal aspects, such as food, such as fuel, to give us a feel for what the basic energy in inflation is. So the Reserve Bank looks at that underlying inflation, but it was also down, as it does shift downwards with the headline data typically. So it was down to 3.2% from August 3.4%. Housing was again a significant factor. So housing rate, it was increased 1.6%, but that's down from the 2.6% over the previous month. So these are annual increases in these increments. So housing was up 1.6% over the year, compared to 2.6% over the year to August. Now, this again is monthly data. So housing includes a couple of factors, right? It includes electricity. It includes, obviously, house costs such as rents and building costs for houses. Now, they were down sharply, but the other factors such as rent and house building costs were actually still quite high on the year-to-year comparison. So that meant that it balanced it out a little bit, but it was still quite low at up just 1.6%. Food was around about the same over the past year, up 3.3%, a little bit better than the 3.4% over the year to August. Now, when we break it down, as I said, the big contributors to lower inflation have been fuel. Now, we've been measuring that. We're going to have a look at again that today, the relationship between fuel costs and inflation, headline inflation. And you all would know out there, you've seen how petrol prices at the Bowser have fallen. I saw just around about $1.50 the other day. Price, it fluctuates, $1.50 per litre.
Please tell me where.
Petrol. And I mean, yeah, well, it's a little station in Melbourne, but again, I saw it at $2.10 yesterday somewhere else. So I'm thinking, what's going on here? Anyway, but I think we know where it was a year ago and where it is now. It's well below that, and we've been tracking that. And we'll have a look at how oil prices are tracking, and it's even sharper fall compared to the previous month, which was down 7.6%. That's a big drop, but it was down 14% over over September. So that is a significant fall. So that's how prices for petrol, oil, excuse me, have fallen over the past year, and that's a big, contributor to that low inflation rate. I'll talk about this when we look at the oil prices in a sec, but it does beg the question: if we've been tracking oil prices, did we ever need to raise interest rates? I mean, the ABS is telling us that the price of goods and services is still rising. So, did we ever need to raise interest rates? We could have just waited for fuel to adjust, as it has. But that's a vexed question, which requires a lot of analysis. But again, the big contributor through the housing costs, as I mentioned, it's included in housing costs, was the price of electricity, which fell another record 24.1% over the past year. And of course, that reflects that government subsidy that was announced in the budget, those $300 per household handouts, and that has resulted in a very big drop in the price of electricity, and that's why we've got lower inflation. Basically, government subsidies for electricity costs and the sharp fall in the international price of oil. But our underlying inflation on this is still ahead of the target range. So underlying inflation is 3.2% on the monthly basis, right? So yeah, it's just above, but still just above that 2 to 3%. Now, the important thing is that this is the monthly data, right? So let's compare this with the quarterly data, which again, I say, is what the Reserve Bank is looking at in terms of its interest rate policy. Now, the quarterly data for underlying inflation came in at 3.5%. So it's actually higher than the monthly data. So we can sort of forget about the monthly data in terms of the interest rate outlook and look at that 3.5%. Now, the Reserve Bank, and we'll discuss this in a bit more depth next week when we look at the interest rate decision from the RBA. The quarterly the quarterly data is what the RBA has said. We are looking at the quarterly data, right? That's what we're going to base our decisions on. So we've got the first lot of the quarterly data with inflation lower, but it's at 3.5%. Now, the Reserve Bank has also said that it needs a sustained period of inflation within the target area. So it's not a matter of just getting one quarter where it's between 2 and 3%. It wants to see it consistently between 2 and 3%. So we haven't even got one quarter yet. So as I said, it'll be the next quarter will come out at the end of April. So even if we get it in the target range there, I would suggest we'd have to get a follow-up from what the Reserve Bank has said for them to cut interest rates. And that would mean over the March quarter, which doesn't come out until the end of April. And the next meeting after that will be the May meeting of the Reserve Bank. So on that basis, if we do get within the target range with the next lot of data, quarterly data, which is the December quarter, we'd have to get a follow-up over the March quarter for the Reserve Bank to act according to what their statements have been. And remembering that it's at 3.5% at the moment. So it would have to be a pretty sharp fall over the next quarter, 3 months, followed up by another sharp fall over the following 3 months. Now, that might occur. Certainly the trend is there, but the underlying drivers, like lower electricity costs, become questionable as those factors dilute from the government handout. But we've also obviously got to be very, very mindful of what's happening with the price of oil. And let's have a look at that in terms of what's happening recently. But this is the inflation numbers. This is underlying inflation on the monthly basis. You can see how that's fallen away quite sharply over the last 3 months. So, that's why it's worked its way into the 3 monthly data. And the monthly data is at 3.2%. We're still well above the US, which has underlying inflation at 2.3, and our interest rates are still well below the US rates, and they had a recent sharp fall of 0.5%. So, we're neither here nor there. We have significantly higher inflation, but significantly lower interest rates. So maybe that's part of the story. But it is that we also measure inflation a little differently to what they do in the US, particularly in regard to housing costs. And we've had this subsidy from rents, and as with Australia, from the government, and as with Australia, the US has benefited from lower oil prices, which has helped its inflation rate fall and helped it cut its interest rates. So that's the chart there. You can see the trend is positive downwards. You can see where we've come from. It was as high as 7.2% at its peak through the end of early 2023, and it's drifted downwards ever since then. But it's drifted downwards because the price of oil has drifted downwards. And you can see that quite clearly, a little bit of a lagged effect there. But you can see how the black line, which is the price of oil, basically tracks what's happening with our inflation rate. Okay, so going forward, it's very important that we keep our eye on what's happening with the price of oil, and we can actually do that because we know, well, except for 1 or 2 days, we know what's happened to the price of oil this month, October, compared to October last year. And you can see it's still down 15.4% compared to the same period last year. So we can expect, again, that to contribute to a lower inflation rate. So that's good news, as we can see that the annual change in the price of oil continuing to fall. That means the price of oil is 15.4% lower than where it was a year ago over October. And we've seen the relationship is very strong between the price of oil and the inflation rate. So the good news should start to continue and start to impact on that next inflation rate, which is very important because we've got to get in the target range. And it's not just once, it's a couple of times. Okay, so let's have a look at that price of oil going forward. And you can see how it's from that peak back in early 2022, how it has basically fallen, but it's been a bit up and down. It did increase last year quite steeply through September and then started to ease through the end of the year. And if you remember, the Reserve Bank actually increased rates a year ago in the face of those higher fuel costs pushing up the inflation rate. We've sort of got better and then been sort of reasonably steady, but we have started to fall recently, and that's been good because it compares us where we were a year ago, and that's why we had a lower inflation rate. But we understand that there are issues now involved with the production of oil globally. We have terrible business happening in the Middle East. We had the Israelis attacking Iran. They thankfully didn't attack the oil fields of Iran. I think they were talked out of that one. But regardless, that did create a little bit of negative sentiment about the price of oil. But it hasn't been too bad, actually. It's been pretty constrained in terms of that reaction. And in fact, we saw a little bit of an easing from the peak. But, we still are in a very fluid environment. And if, the Iranian oil position can be maintained, and it is one of the world's biggest producers of oil, then we should be okay going forward. And the other big factor that's contributed to lower oil prices has been that Saudi Arabia, which is the biggest producer of oil, has announced that it no longer, it had set a target of $100 US a barrel, right? And that's what's kept upward pressure on oil prices. But it's now announced that it's no longer going to set that target. So perhaps concerned that it might reduce demand, higher oil prices, and therefore it wouldn't really win higher prices, less demand, and maybe overall lower income for the Saudis. So that's a good thing. So there's no, high price target, $100 US a barrel for oil from the biggest producer. So that'll help going forward. And that's been one of the factors that's pushed down the price of oil in recent months. But as I said, the joker in the pack is what's happening in the Middle East. And we just hope that doesn't affect oil supply in terms of us wanting to get our inflation rate down so we can get lower interest rates, which makes just about everybody happy. So one of the other factors, as I mentioned, that contributes to the housing costs in the CPI, the inflation rate model that the ABS uses, is house building costs. We know they went through the roof following the previous government's home builder policy, which released support for or funds for those wanting to build a new home. It caused a flood of demand for new houses. Back in 2022, we didn't have enough building materials, we didn't have enough labour. So guess what? The price of housing to build a house went through the roof. And you can see there that increase. Obviously, the increases have started to ease, as you can see on the chart, and they were basically flat, slightly higher over August compared to July, but they're still around about 50% higher than where they were in 2021 prior to COVID. So that's a big increase in the cost to build a house. And of course, that's another constraint for us trying to find more housing for our populace, which is definitely suffering from an imbalance of supply and demand. And when we look at the growth rates, we can see the annual growth rates, and this, of course, is what the ABS looks at for its housing model to contribute to the housing model, up 3% over the year, which is basically the same as the previous month, September. So still rising by 3% a year, house building costs. As I said, they're 50% higher than where they were prior to COVID, but at least the growth rates have significantly eased, the annual growth rates, but they're still well above what we saw typically prior to COVID. And that's why that hasn't been a significant contributor to lower house building costs. But the next week or so, we will look at the latest data. So that's the latest data in terms of the economy. I think it's important because it has a significant influence on the prospect of interest rates. I hope we've provided some insight into that prospect from our analysis today. That's what we're trying to do. Of course, it's not only welcome news for mortgage holders, lower interest rates, but it will, if it does come, as I said, I think we're looking May at the earliest. If it does come, it'll certainly produce a kick along to our housing markets and will be welcomed particularly by those markets that have been sort of moving a little bit sideways, such as the Melbourne market, which some early signs now, and the Canberra market as well. And those markets that are sort of reaching their peaks, their cyclical peaks now, will also be sort of refueled by lower interest rates when and if they come next year. So last weekend was Super Saturday. Whoa, Super Saturday, that's what we call the weekend before the long weekend for the Melbourne Cup, which is celebrated in Victoria. So we had big numbers of auctions. We've got the weekly data this week, not the weekend data, but it's still very big. And it really didn't affect the results. Even though we had thousands of auctions, we still had reasonably big numbers, or solid numbers of clearance rates and sales. But we're going to have a bit of a break this week, a couple of hundred at best auctions in Melbourne, and there'll be fewer auctions in the other capitals as well. But what we're doing from this weekend onwards, we now move into the final phase of the spring selling season. And typically we have the balance between buyers and sellers starts to move between having more sellers and fewer buyers for various reasons. So we'll see how that affects the market, because that can tend to push clearance rates down, of course, offering more choices for buyers and more competition amongst sellers. So a few auctions this weekend coming up, predictably, and then we'll start to see another surge in auctions through to the end of the year, which is in around about 7 weeks' time, the end of the auction season. So I hope you've started your Christmas shopping. It is Black Friday, I think, this week or next weekend, or next week. I'm not sure. Is it Black Friday? Yeah, I think next week is Black Friday. So obviously should be lots of good buying to do there, but I'm not spruiking Black Friday today. So here are the numbers. 1,300 auctions in Sydney. Now, this is the weekly auction data, not the weekend auction data. We'll be back up with the weekend data next week. A clearance rate down a little bit, 65.2%, after a good result the previous weekend in Sydney. But Sydney's been tracking around about the mid-60s for a while now, and we have seen Sydney's prices growth start to flatten, but that's more about Sydney having reached its sort of cyclical price peak, and that's because affordability barriers are starting to constrain the ability of buyers to pay more, because as you know, we have strict lending conditions in this country, which is a good thing, because it means we can't overborrow, but it gives us that price ceiling once the energy that is released from lower or higher interest rates and also the release of pent-up demand through changes in sentiment peaks out, and that's what we're sort of seeing in Sydney. Melbourne, big weekend for Melbourne, 1,782 over the week auctions, but the Melbourne clearance rate was actually higher, so there's some good signs, 65.1%, and it wasn't too far away from the same weekend last year or the same week last year, so pretty good sign there for Melbourne. Big numbers, clearance rate holding mid-60s is mixed result. Brisbane, again, high numbers over the week. Clearance rate, Brisbane's tracked below 50% on and off for a few weeks now, so we keep an eye on that Brisbane market. It doesn't have the same impact, the auction market, on the wider market. Brisbane, it has a different auction culture, as we explain every week, but nonetheless, we keep an eye on that, and we'll look next week at how prices are tracking in Brisbane. Adelaide, big numbers also in Adelaide. Adelaide's fallen away a little bit also over recent weeks. We were used to 80% clearance rates in Adelaide. We're now seeing 60% clearance rates in Adelaide. Again, signs that Adelaide market may be peaking out, as I said, for the same reason Sydney and maybe Brisbane are, because of the high prices growth that we've seen. Canberra, good weekend in Canberra, big auction numbers and a similar auction clearance rate, and well above where it was a year ago. So maybe we're getting some more positive signs from Canberra, but we do need to see that consolidate above 60% for some weekends with that, what has been an underperformance, particularly recently from Canberra, which matches its sort of underperformance over the latter part of last year. So that's our trend. Sydney trend just down a little bit over October, under 70%, as I said, maybe reflecting that market peaking out. Melbourne around about where it's been, but had a better result last weekend. So still in the mid-60s, the Melbourne market. And when we look at the regional breakdowns, some of the higher priced areas in Melbourne have been starting to pick up, which is what we do expect through spring. So maybe that's a bit later in the season for that, which we normally see, but maybe that's some more signs for Melbourne. Brisbane, as I said, just been tracking in the 40s rather than the 50s over the last 2 months, maybe affordability barriers again. Similar story in Adelaide. It's also been tracking lower in terms of its clearance rates, but again, that follows that period of boom time growth, which is still very strong with the latest data we'll look at next week. And Canberra, maybe looking a little bit better, but we need to see those Canberra clearance rates above 60%. Even though our clearance rates have been a little lower recently, the number of properties that are coming into the market, particularly for auction, is still at record levels, very high numbers of properties. And when we put it all together, the clearance rate and the high numbers of listings, the actual numbers of sales is very, very strong. So this is the spring market so far compared to the same market last year. And this is the number of sales. So look at these big increases in sales, nearly 30% increase in auction sales in Brisbane, 20% increase in Adelaide, higher in Melbourne too, 12%, Sydney up 16.8%. Plenty of sales happening, and that's a very strong, obvious metric for understanding how our markets are going. Is just to compare sales on a year by year basis, and some very strong results there. As I said, reflecting those high listing numbers. Canberra, as we said, it's been an underperformer. Canberra, no surprise there that its sales numbers are lower over spring so far compared to the same period last year. If you want those auction clearance rate results, you can go to my LinkedIn site, Doc Andrew Wilson at LinkedIn, every Saturday night at around about 6:30. You'll get the headline results, which is the clearance rate and the number of listings on each of the capital cities compared to the previous week and the same period last year. If you've missed that, there is a QR code if you're watching the screen, and that will give you a PDF copy of the latest weekend auction market result, which gives you the regional breakdowns, the national auction market report, which gives you the regional breakdowns for Melbourne and Sydney. So you can see how the Melbourne and Sydney regions are going, which gives you some insights into local performance, and also the top 10 sales under the hammer over the week for each of the capitals. So just finishing off as usual, the My Housing Market Infinity Suburb Data app. This gives you access to real-time suburb data for listings and for listing prices and listing rents for every suburb in Australia that has data. So what a great insight for those that are wanting to analyse, or just for curiosity's sake, see what's happening in your local suburb. That's a QR code to get hold of that, and a link, but I must alert you all that it is password protected, and you need to get that password through our good friends at Infinity. But it's a great app, and it's a real resource for those interested in what's happening in real time in Australia's property markets on a suburb basis. So here's a screenshot for the app, cute little app. You can filter it for price or rent. These are listed prices and listed rents. You can filter it for the state or the capital city region of that state. We've filtered this for New South Wales, Sydney region. We're looking at Blacktown as the suburb. Houses, you can filter it for houses, units, and townhouses. And you can also filter it for the number of beds. So we're looking at a 5-bedroom house in Blacktown. It's not just the median price we come up with, it's also the low and the high asking price. We've got their median price of 1.5 million, a high of 1.55 million, 1.3 million median, and a low of 1.1 million. And there are currently 14 properties for sale of that nature in Blacktown. Exactly the same thing for rents. You can do and look at what the rental data is for any suburb in Australia that has data. We've also got a little addition, drum roll. We now have for investors an important metric, and that is you can find what the top 10 suburb yields are Australia-wide. So you can look at, again, the region, either the capital city region or the outside capital city region. You can filter it for unit house or townhouse, and for the number of bedrooms or the total bedrooms. Here we're looking at Sydney, units and 1 bedroom, and it can show you there that the Ultimo has clearly the highest yield. So this is ranked from high to low. The reason the Ultimo yield is so high is because it includes a lot of student accommodation, which is typically lower. We can't really filter out student accommodation, so it does give us a bit of an aberration in terms of the data. We might figure a way of doing that, but we'll probably then move down to Glebe, which actually is next door to Ultimo. And that's the highest yield for a 1-bedroom suburb in Sydney, in the Sydney region, 6.9%, which is a pretty fair yield overall. So this is a good signpost for investors looking for the top performers. And you also have there the number of properties for sale and the number of properties for rent. So you can sort of look at that to match the yields. Obviously, you can look at the balance between number of properties for sale and the number of properties for rent when doing your analysis. And just a late news flash, we are going to be adding the vacancy rates for these suburbs in the next week or so. So you'll also be able to see what the suburban vacancy rate is as well. And this, of course, is all an Australia first, maybe an international first, a global first. But look out for that as well. So, hey, this is pretty exciting stuff.
You heard it here, Doc.
Yeah, we may have some additions to this app, so it really becomes a very useful resource, particularly for investors. And Australia has around about 2.5 million property investors out there. So get hold of that, and it will assist you. And as I said, we're still working on some great updates to the data. And as I said, it's real-time data, so we update it constantly. So it's not sort of backward-looking going forward. And it's not price data because that's backward-looking. This is what's happening. This is what people are asking for their properties as we speak, for asking prices, and that's a bit more relevant. But we are going to have some data in regard to suburban sale prices, but that'll be just as a guidepost. So we'll see how that pans out. But look out for those vacancy rates that will be coming through in the next week or so. So next week, October house and unit prices. Let's have a look at that. We'll also discuss the latest RBA rate decision, and we'll look at the September home building approvals, and as usual, the latest auction results, and we'll be back to a weekend model next week. So thanks very much, everybody, for listening in today for episode 102 of the Wilson Weekly. And if you've missed it or you want a refresher on the data, you can get a copy of that as a PDF file from that QR code on the screen. So good on you, everybody. Enjoy your Melbourne Cup weekend if you're getting it, and hope you're back a winner.
Thanks, Doc. Appreciate your time as always, mate. Thank you to all our viewers.
Thanks,
as
mate.
well.
It's good to be here. Yeah, and we'll catch up again next week.
Will do. Take care, Doc. Be safe.